We shall quickly start with Ind AS 36. That is impairment of assets. Let's do a quick revision. Okay, for few assets are excluded from Ind AS 36 perspective. One is inventory, DTA, employee benefit asset, biological assets measured at fair value less cost to sell, incurrent assets, financial assets. Many assets are excluded. That means indirectly which asset is included? Property, plant and equipment, intangible asset, investment property. These will come under Ind AS 36 provisions. Okay, all other assets are excluded. Okay, that's what you can remember it as. Fine. The next one. Okay, again, this is also a standard where if you just understand the provision, you may not get it because the questions are important and they're quite good. So one quick revision of the concepts we'll do, and then we will apply it in some 3 or 4 problems. Okay, we'll try how much of our time permits. That many problems we shall take it up. Okay, so bear with me for the next 5-10 minutes, even if you're not getting it. Ideally, we have done all this in detail. Almost 15-20 hours we have spent for this standard alone in our regular class. But I do understand that some of you would have not taken class from me, or how much of it you remember, I don't know. Yeah. So Jeff, bear with me for 10 minutes, see if you can make sense out of it. Then we will apply it in the problems. So first, impairment loss will only come under one scenario: when carrying amount is greater than recoverable amount. Only if carrying amount is greater than recoverable amount, impairment loss will come. Otherwise, no. That means to do impairment loss calculation or check, we need something called RA. RA is in recoverable amount. So how often should we find recoverable amount? Because today if the carrying amount is 1 lakh, after 1 month will it be 1 lakh? No, it will be different. Like that, if today's recoverable value is 1 lakh, after 1 month it could be different. So daily basis, weekly basis, monthly basis, it will change. So if it is going on changing, that means we have to find out RA every time. No. Standard says you need to do impairment check by finding recoverable amount only if impairment indicator arises. Only if there is impairment indicator, find recoverable amount and do impairment check, otherwise not necessary. So what is our impairment indicator? Impairment indicator could be an external indicator or an internal indicator. External indicator means, sir, you have an asset. The market value of the asset has fallen. That is an external indicator. Or let's say some adverse changes in technology has happened. We are using one asset, that particular asset technology has become outdated. That means again an impairment indicator. Or government has put some ban on that asset. Okay. So again an external impairment indicator like this. Or it could be some internal indicator like the asset has got damaged. Due to whatever reason, voluntarily, forceful, by mistake, we don't know. Asset has got damaged. Okay, or change in the usage pattern of the asset. Earlier, you used to use the asset for 10 hours every day. 10 hours every day you used to use before. Now you're using it only for 5 or 6 hours. That means usage hours has got reduced. That is an internal indicator for impairment. So if such indicators are there, then only you need to find out recoverable amount and do the impairment check. Okay, that's one. All right. However, for few assets, whether there is impairment indicator or not, compulsorily you need to do impairment check for 3 specific assets. Annually you need to do impairment check, even if impairment indicator is not there. We already studied. One is intangible assets with indefinite useful life. Intangible assets which have infinite useful life for them, and then intangible assets which is not yet available for use, like intangible assets under development phase expenditure. That one. Third one is goodwill arising on account of business combination. For these 3 assets, whether indicator is there or not, every year at least once you need to do the impairment check. Okay. Goodwill arising on account of business combination, intangible assets with infinite useful life, intangible assets which are not yet available for use, development phase expenditure basically. Okay. All right. Now recoverable amount, how do you get it? Recoverable amount is basically, the name itself is saying recoverable amount. There are 2 ways through which you can recover from the asset. One by selling it or by using it. That only standard is saying higher of the 2 will be your recoverable amount. What is it? Either by selling it, how much will you get? That only standard uses the term as fair value less cost to sell. Or by using it. By using it, instead of saying by using it, they use a specific term called value in use. So recoverable amount is basically higher of 2 things: fair value less cost to sell and value in use. Okay. You have to compute those 2, higher of the 2 becomes recoverable amount. So how do you get fair value less cost to sell? There is a preference. First preference will always be towards a binding sale agreement. If you made an agreement with a third party that in future you'll sell that asset, let's say for 5 lakh, that 5 lakh itself becomes fair value less cost to sell. You don't have to check any other data. So binding sale agreement is the first preference. Second is active market of a price. So you go to the active market, check whatever is the fair value of the asset, that only becomes your fair value less cost to sell for this option. Or you find out fair value less cost to sell based on management best information. If nothing is possible, if none of these 3 work out, means ignore fair value less cost to sell, value in use itself becomes RA. If all the above 3 option is not there for you, there is no active market, there is no third party sale agreement, nothing, you can't do estimate also, means ignore fair value less cost to sell, value in use itself you adopt it as recoverable amount. That one. All right. Another one is value in use. How do you get value in use? Value in use is nothing but Obviously, now we are using laptop, iPad and all that. By using it, obviously, we will get some benefit, right? Let's say we'll get the benefit for 5 years. Yes. So can I take that 5 years ka total benefit? No, adding total benefit would be wrong because we are doing impairment check today. The benefit that I'm going to get is in future. Hence, value in use is nothing but your present value of future cash flows. Okay, expected from use of the asset. Also, at the end of 5th year, what I'll do? I'll sell off all this asset at scrap value or residual value. So value in use is nothing but present value of future cash flows from continuous use of the asset and present value of residual value. So that, if I want to use the asset for 5 years, how much benefit I'll get? Find out the present value of that. At the end of 5th year, let's say I'm going to sell it for 10,000. That 10,000 is future value. Again, find out present value of that. These two summation will be your value in use. Okay. By using, how much will you get? Present value. And by selling, how much you will get at the end, that also find out the present value. Both summation will become your value in use. That means there are two parameters which will drive value in use. One is your future cash flows, another one is discount rate. For future cash flows, you need to keep few parameters. One is future cash flows is based on management estimate because nobody else will know this, how much cash flow will get. Yes. So management estimate. Ind AS 36 says that take the future estimates only for 5 years. You take future cash flows or restrict your future cash flows only for 5 years. That means indirectly they're saying asset will give you future cash flows only for 5 years. But company feels one asset is there, it will give you future cash flows for 8 years. That means they don't want to take 5, they want to take 8. If company wants to take a future cash flow higher than 5 for more than 5 years, you need to justify. You can take a higher number provided it is justifiable. They have to state with the reasons why they are taking estimated future cash flows for more than 5 years. You have to justify. Okay, that is one. All right. And few things you need to ignore. One is if there is an uncommitted future restructuring cost. Restructuring means closing down a division, selling a product, etc., etc. So in future, if you're planning to do any restructuring cost and it is not even committed, it becomes committed only when the restructuring plan is announced. Okay, if it is not yet announced, if you're just thinking about doing future reconstruction in future, when you do restructuring and all, certain assets division, if it is closed, means asset and all will be sold off. So the benefits will change. So since it is uncommitted future restructuring cost, ignore it because we want doing the impairment check now. All this will come in future and they're not even committed. So ignore that. And if you have any income tax receipts and payments, ignore it because this is an activity before tax. So hence income tax, if you have any income tax payable, income tax refund, blah, blah, blah as cash flow, ignore it. And if you have any future improvement from the asset, let's say one asset you're planning to expand. A factory, let's say, has a capacity to produce 1 lakh units right now. Next year, you want to expand it and make it as 2 lakh units next year. So if you are doing a capacity expansion means to do that capacity expansion, you have to incur extra cost also and you will get extra benefit also. But all this extra cost, extra benefit you will incur in future. But we are doing the impairment check now. So hence all this future improvement cost, future benefits and all you ignore. All right. This is for cash flows. However, if you have any asset where you're generating cash flow in foreign currency, this could be one of the important. We have done a few questions in our regular class on this, but I think for now we'll just go through it as pointers. If you have an asset and on that asset you're getting future cash flows not in Indian rupees but in a foreign currency, let's say in dollars, how you need to compute this? First, to take foreign cash flows in foreign currency itself. Meaning here in my example it is dollars. So take the cash flows in dollars itself. Future cash flows you do it in dollars only. Then we don't want future cash flows. We want present value of future cash flows. I mean we need discount factor. Don't take the discount factor related to India. So since you're getting the cash flow in dollar, take the discount factor relating to foreign currency itself. So dollar related discount factor will be given to you in the question. Take that itself. So when you find out present value, that only we call it as value in use. So since both the value is in dollars, value in use also you'll get it in dollars. But we can't do impairment loss ka booking in dollars. We need it in INR. Yes. Let's say you are doing impairment check on 31st March 2025. On this particular day, you're doing impairment check. So find out the exchange rate. What is the exchange rate on this? Let's say one exchange rate is $1 is equal to 80 rupees. So let's say this value in use is $1,000. Now value in use in dollars, you have to get it in Indian rupees. What you do is, which day are you finding out value in use? 31st March in my example. So what is the exchange rate on that day? Use that exchange rate to convert this value in use from dollar to INR. So here you will do 1000 into 80, which will become 80,000. Fair enough? Not any other exchange rate. The day you found out value in use, that day ka exchange rate will be given to you in the problem. Convert this value in use into Indian rupees using that particular exchange rate itself. It's a very simple question. All the data will be given. So just watch out. We have a few questions in our study mate also regarding this, which I've explained it. I think this is manageable. Yeah. All right. And then the discount factor. Since this is an impairment loss related to asset, you have to use asset specific discount rate. If that is missing, you can use incremental borrowing rate, which most probably incremental borrowing rate is what will be given to you in majority of the problem. That will be the discount factor you need to use. Okay. Now impairment loss. So where will impairment loss go to, sir? Sir, impairment loss will go up to SPL. Yes, sir. No. First, no, sir. Check. if let's say one asset, let's one plant and machinery, okay, on this there was an impairment indicator. Let's say the asset has got damaged. Okay, so that is an internal impairment indicator. So you did impairment check and you got an impairment loss because carrying amount was greater than recoverable amount. Okay, but this asset, no sir, was previously revalued. Previously, not in this year, previously it was revalued and you got a revaluation surplus balance of 1 lakh rupees. Previously it was revalued and you had a gain which is parked in revaluation surplus for 1 lakh. So current year, let's say impairment loss is 1,30,000. Then what you do in this case is entire 1,30,000 you will not transfer it to SPL. First check if there is any revaluation reserve. Yes, how much revaluation surplus balance is there? 1 lakh. So out of 1,30,000, 1 lakh will be first adjusted with revaluation surplus. Balance 30,000 only you will transfer it off to P&L account. So first revaluation impairment loss will be adjusted with the revaluation surplus. If revaluation surplus is not there or if it doesn't have enough balance, then the balance impairment loss will be transferred off to P&L account. That is what I'm talking about here. Okay. And after charging impairment loss only, you need to calculate DTA or DTL. More about this we'll study in Ind AS 103 business combination. Okay. This was about recognition. Next is, sir, the problem is, see, impairment loss, one major drawback here is, sir, to find out impairment loss, we need carrying amount and recoverable amount. Only if carrying amount is greater than recoverable amount, we calculate impairment loss. Now, imagine like us only, ArivuPro. Yes, we have many laptops. Yes, let's take one laptop. Here, I'm using one to conduct class. No, I am using this laptop to conduct a class. Right? What is the benefit I'm getting from this laptop? Because recoverable amount is nothing but present value of future cash flows. So can we as an ArivuPro estimate future cash flow of this laptop alone? No. Laptop is getting benefit, but we are not getting benefit only from this laptop. We are getting benefit by conducting class. And to conduct class, we don't need just laptop. We need a laptop, we need iPad, we need a mic, we need camera. Yes, we need AC, we need TV, etc. The means benefit you are not getting from one asset, you are getting from group of assets. Individual asset is not giving us the benefit. Group of asset is giving us the benefit. That means individual asset ka benefit we can't find. If you can't find out benefit means you can't find value in use. If you can't find out value in use, you can't find recoverable amount. If you don't know recoverable amount, you can't find out impairment loss. That means it goes in loop there. So there has to be some workaround. Hence, they brought in a small concept called CGU, cash generating unit. CGU means the smallest group of identifiable asset which can generate independent cash flows. So we do understand that certain individual assets don't generate independent cash flows, but a group of assets can generate the benefit. Yes. So identify that small group of assets which can generate benefits. Organization has to find the smallest group. That the smallest group we call it as CGU. Okay. Now we will do the impairment check not on individual asset basis. We will do it on CGU basis. I mean, now what we'll do, first we will find out the carrying amount of CGU, not carrying amount of asset. We'll find out carrying amount of CGU. CGU means there will be many assets. First find out the carrying amount of CGU. Let's say that is 1 lakh. Then you have to find out recoverable amount of CGU. Let's say that is 80,000. Then now you just what? Carrying amount is greater than recoverable amount here. I mean, now you will get impairment loss, not to one asset. This is impairment loss related to CGU, which is 20,000. Okay. So now you have to do the impairment loss at a group level. And in this particular example, you have got an impairment loss of 20,000. Now what you have to do? Entire 20,000, can I give it to one asset? CGU means there are many assets. Now means you have to do allocation. Okay, you have to do allocation. So now this impairment loss, now people, will be first allocated to goodwill. First, this impairment loss, check if any CGU has any goodwill. So out of this 20,000, what if the group has any goodwill? Means let's say this group has a goodwill of 15,000. Goodwill ka balance is carrying amount is 15,000. So out of 20,000, 15,000 will be straight away. Impairment loss of 15,000 will be given off or be adjusted with goodwill. Then it will be adjusted. How much is the balance? 5. Balance 5,000 will be adjusted with the remaining assets. Remaining assets could be whatever. If you have, let's say, 3 assets like plant and machinery, land and building, and let's say patent. So this 5,000 impairment loss will be allocated to other assets. In what ratio? In their carrying amount ratio. Whatever is the carrying amount of the assets, in their ratio will be allocated. That's what I've written over here. Okay. So allocate the goodwill first to goodwill. Balance impairment loss will be allocated to other assets of CGU in their carrying amount ratio. Okay. All right. But before that also, first you need to, now, okay, let's take one step back now. Okay. Now, you did a business combination and you got goodwill. A company did a business combination and they got goodwill. Can goodwill generate independent cash flows? No. That means goodwill and corporate assets like head office building. So factory building, if you have a factory building, you will use that for production. That means there is a benefits. Suppose you have a head office building. What is the benefit from that? No benefit. Yes, no? I mean, it can't generate independent cash flows. So for goodwill and corporate assets, no, you can do impairment check only at CGU level. You can't do individual impairment check for goodwill and corporate assets. You can only do it at CGU level. That means what? If there is goodwill or corporate assets, you have to allocate among the CGU. So if you have goodwill of 1 lakh and if you have 2 CGUs, so 1 lakh of goodwill has to be allocated to all the CGUs or only one CGU, problem will tell that. Okay. Fine. If the goodwill is related to all the CGU, we'll allocate it to all. If it relates to only one CGU, we'll allocate it to one. Problem will give us a guidance on that. In what ratio, how it should be allocated on, they'll mention in the problem. Okay. So basically the point I'm trying to prove over here is the goodwill and corporate assets can't generate independent cash flow. So you have to test their impairment only at CGU level. Okay. And CGU impairment loss, you already know. First allocated to goodwill and then to the other assets in the carrying amount ratio. But you need to keep in mind after allocation of impairment loss, no? Sir, when you allocate impairment loss is just like depreciation. Okay. So when you allocate an impairment loss, carrying amount of the asset will reduce. Okay. So after impairment loss, sir, the carrying amount of the asset should not fall below 3 things. Like in this example, 5,000 you will allocate to other assets. Let's say I have 2 assets, building and plant and machinery. Let's say the carrying amount of building was, let's say 4 lakh and this 4 lakh. Let's say this was 10,000 and this was, let's say 5,000. Carrying amount of the building was, I've taken a small example, just sync up, okay? Building is 10,000, carrying amount of building is 10,000, plant and machinery 5,000. That means the ratio is 2:1. So 5,000 will be allocated in 2:1 ratio. I should take another one. Okay, leave, that's okay. 5,000 into 2 by 3. So how much you will allocate it to building? 5,000 into 2 by 3. That will be 3,000. For simplicity, I'll round it off to 3,300. You're getting 3,333, blah, blah, blah. Take it as 3,300 for building. What will be plant and machinery? The balance 1,700. So what will be the carrying amount after impairment loss? Before impairment loss, it was 10,000. After impairment loss, you'll reduce 3,300 and it will become how much? 10,000 minus 3,300. It will become 6,700. Like this. Okay. So what they say is after you allocate impairment loss, carrying amount will come down. Okay. So there is a low capping. There is a limit to what extent you can reduce this. They say after impairment loss, carrying amount should not fall below. It should not come below a certain number. There is a ceiling lower limit they've established. After allocating impairment loss, carrying amount of the asset should not fall below 0, fair value less cost to sell, or value in use. This is the thing. So basically, these two is nothing but your recoverable amount. After allocating impairment loss, asset carrying amount should not fall below recoverable amount, or it should not fall below 0, meaning it should not become negative. So they're saying, let's say carrying amount before impairment loss was 10,000. Okay, you allocated impairment loss of 15,000. Is that right? An asset before impairment loss, its carrying amount was 10. Now you did an impairment loss allocation of CGU, and this asset impairment loss came to be 15,000. That means this asset carrying amount balance became negative. They're saying this is not acceptable. Maximum amount you can allocate is, you can't allocate 15, you can allocate only 10 and make this to be 0. It cannot fall below 0, meaning it cannot become negative. Or it should not fall below its recoverable. Okay, like here, let's say the carrying amount before impairment loss was 10,000. You allocated an impairment loss of, let's say, 2,000. So when you allocate impairment loss, the carrying amount will not be same. It will fall. So that means what is the revised carrying amount? Revised carrying amount is 8,000. Let's say the value in use of this particular asset, let's say this is plant and machinery. Okay, let's say value in use of this machinery is 9,000. Do you think this is fair now? No, right? Why? Sir, check. Before impairment loss, it was 10,000. Okay, its value in use is 9,000. Let's say this particular asset ka fair value you cannot find out. That's the reason you are not doing impairment check on an individual basis. You are doing it at total basis. Okay, or you are doing it at CGU basis. But value in use you can find out. Let's assume. Okay, or it could be other way around. This maybe you can assume like this: fair value less cost to sell. Value in use may be difficult to find for individual assets. Fair value you can find out because that is the value by selling the asset. No. So if you sell this plant and machinery, let's say you get 9,000. Let's take this way. Fair value less cost to sell is 9,000. Value in use you cannot find out because it doesn't generate individual benefits. Group of asset is generating the benefits. But fair value less cost to sell is 9,000. Now what happened after your allocation? Before allocation, carrying amount was 10,000. You allocated impairment loss of 2,000. That means after allocation, impairment loss carrying amount became 8,000. But its fair value less cost to sell is 9,000. Right? So we know the recoverable amount. How do you get recoverable amount? Higher of fair value less cost to sell or value in use. That means the recoverable amount of this asset is anyway greater than 9,000. But after impairment loss, you're making carrying amount to be 8,000, which is unfair, right? That means maximum you can bring this carrying amount is lower limit is 9,000 to the extent of its recoverable amount. That means before impairment loss, it was 1,000. Maximum impairment loss you can only give is 1,000. Okay, there's not much tested in exam, but just saying it for your reference. Okay, so just quickly I'll recap it over here, this particular provision, and then we will dive into the numbers. I know these are better learned through numbers, but we don't have so much time to do so many questions. I'll do three or four, but that's the reason I'll give you a quick recap of this. Many assets don't generate independent cash flows, so hence we do the impairment check at CGU basis. CGU is nothing but group of assets. All right. So goodwill also don't generate independent benefits, and corporate assets also, like head office building also, don't generate independent benefits. So you have to do the impairment check only at CGU level. So first thing is goodwill and corporate assets you have to allocate to CGU. How many CGU in what ratio? Problem will specify. Do that allocation. Next is what? Find out carrying amount of CGU, find out recoverable amount of CGU, and see if any impairment loss relating to CGU is there. If at all CGU is impaired, first impairment loss you give, or maximum impairment loss you give it to CGU ka goodwill. Then to the other assets. Other assets in what ratio? In their carrying amount ratio. That is one. So when you allocate impairment loss to other assets in their carrying amount ratio, after allocation of impairment loss, carrying amount will reduce. Okay. So in this reduction also, they have defined a lower limit. What is that lower limit? After booking impairment loss, carrying amount of this asset should not become negative, meaning it should not fall below 0, or it should not fall below its recoverable amount. And how do you get recoverable amount? Fair value less cost to sell or value in use. So it should not fall below these three. This is your lower limit defined. Okay. So that's what is the provision ka summary here. All right. Next is impairment loss ka reversal. Sir, can you reverse impairment loss? Yes. If you can charge impairment loss, means subsequently in the later years, you can also reverse it. So, but reversal means they put some condition. For you would have charged impairment loss only when there was an impairment indicator. Now you can reverse impairment loss provided that indicator has either got reversed, that indicator no longer exists, or its effect has reduced. Like when COVID came, you would have booked impairment loss. Now when COVID vaccine has come, its COVID effect has reduced. No? Yes, that means you can reverse the impairment loss like that. So that indicator should have got reversed, or its effect should have reduced. In that case, you can reverse impairment loss. Okay. So in the reverse also you should keep in mind. Okay. So what will happen to reversals? First check how have you booked impairment loss, on individual asset level or CGU level. So I booked on individual asset levels. Okay. Then check initially what did you do for impairment loss, because if you are booking individual impairment loss, means impairment loss can be first will be adjusted with revaluation surplus. If revaluation surplus is not there, means you will transfer it to P&L. So if earlier impairment loss was adjusted with revaluation surplus, means reversal also will happen through revaluation surplus itself. Okay. If earlier impairment loss was accounted or transferred to SPL, means reversal also will happen through SPL like that. Okay. Fine. So whatever you have done before that, you need to undo. This is for individual assets. So I charged impairment loss earlier at CGU levels. Now you can also reverse it. Okay. You can, excuse me, 1 minute. Okay. What the standard says is, like, see, when you charge an impairment loss, there was a lower limit, because when you book an impairment loss, carrying amount will reduce. So there was a lower limit. When you reverse impairment loss, carrying amount will increase. So there is an upper limit also. For charging impairment loss, there was a lower limit. For reversal of impairment loss, there is an upper limit. So what is that upper limit? Again, there is an upper limit for individual asset, CGU asset also. So if it is impairment loss relating to individual assets, what is the upper limit is? Think, if this Mo Maya was not there, if this impairment ka drama was not there at all, what would have been your carrying amount? Okay, first year you charged an impairment loss. Third year you want to reverse impairment loss. Okay, if impairment loss was not there in first year, what would have been the carrying amount? What would have been the carrying amount in year 3? First find them. To that extent, you can revise the carrying amount, or you can bring that carrying amount. Beyond that, you cannot go. That is the ceiling limit. Okay, so if you have not done impairment loss from the beginning, what would have been the carrying amount? To that extent, you can bring it up, not beyond that. Okay, that is for individual asset. For CG also, same thing. Okay, if you had not done the impairment at all, what would have been the carrying amount? Find that, or recoverable amount, whichever is lower. So for upper limit for CG, there are 2 limits. One, if you had not done impairment loss at all, what would have been the carrying amount, or recoverable amount, whichever is lower. Maybe we'll apply this in one of the problems to get a little better understanding, because these are better learned with the help of numbers, because when we say provision, if you have learned it, you will know it. If you're especially looking at it for the first time, you'll be like, what nonsense is this? Yeah, that kind of feeling you'll get. I don't understand. Nonetheless, we'll run through a few questions. Yes, now we'll quickly go through a few questions, then we shall take a break. All right, people. The first one, question number 11, we shall run through. On 1st April 20x1, Venus Limited acquired 100% of Saturn Limited for 4 lakhs. So that is your PC. Okay. The fair value of identifiable asset was 3,20,000. Okay. So PC is 4 lakh, net asset is 3,20,000. So obviously NCA is not there. So goodwill would have been 80,000. They have only given. So goodwill due to business combination is 80,000. Saturn is in coal mining business. On 31st March 20x3, hang on. You have acquired on 1st April 20x1. Now we are talking about 31st March 20x3. Net asset value is how much? 3,20,000. This 3,20,000 was the value on 1st April 20x1. Now we are not on 1st April 20x1. We are on 31st March 20x3. So 2 years is already over. First depreciated. So they must have given some data. Venus uses straight line method of depreciation. Useful life of the asset is 20 years. So depreciates. 3,20,000 you depreciate over 20 years. And you have used it for 2 years already. So 3,20,000 divided by 20 into 2 will give us how much? 32,000. So that means what will be the revised carrying amount? Revised carrying amount will be 2,88,000. That's what they've taken away. Okay. This is your initial asset. 2 years they've depreciated and they've taken the carrying amount of other asset to be 2,88,000. 80,000 is goodwill value. That stays as it is. Maybe there was no impairment indicator. On 31st March 20x3, the government has cancelled license given to few states. Okay. Government has put some negative. They put some ban. I mean, there's an external impairment indicator. Whenever there is an impairment indicator, we know that we have to find out recoverable amount. Carrying amount we already found out. And we know goodwill cannot be tested for impairment individually. It has to be tested at CGU level. That's the reason. Maybe here there's only one CGU. That's the reason we have allocated to that. As a result, Saturn's revenue is estimated to reduce by 30%. Adverse change in the marketplace regulatory is an indicator of impairment. Nice. Venus has to estimate recoverable amount of goodwill, blah, 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 and all they've given. They've given straight line method. Useful life is 20 years. We already considered. Residual value is 0. Already considered. No independent cash flows, blah, 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 blah. Due to regulatory entangle is not possible to determine. They're saying it's not possible to find out selling price of Saturn assets. Meaning fair value less cost to sell, we cannot find out, it seems. Value in use is estimated to be 212. You already told that. If fair value less cost to sell, if you cannot determine, then value in use itself becomes your recoverable amount. Okay. All right. So this is one. So goodwill you have to allocate to CGU and then only do it. Here there is only one CGU that they're talking about. So we allocate it. So that means what will be the total carrying amount? The total carrying amount of CGU is goodwill 80,000 and other assets got 288. Put together is 368. So carrying amount of CGU is 368. Do you know recoverable amount? Though fair value less cost to sell you cannot determine. The value in use you can adopt it as recoverable amount. How much is that? 2,12,000. Recoverable amount is given to be 2,12,000. So 368 is carrying amount. Recoverable is only 212. That means you have an impairment loss of 156. That is what they've given over here. This is your total impairment loss. This is relating to CGU. So what you will do? First impairment loss you will allocate it to goodwill. How much maximum goodwill you have? So out of 156, 80,000 of goodwill you can allocate because only 80,000 goodwill balance is available. So in 156, if 80 goes to goodwill means balance 76,000 will go off to the other assets. Other assets ka breakup they've not given, so we'll not worry about further bifurcation. So this is the basic trend. Okay, sir. And after you allocate the impairment, the carrying amount will not be same. It will reduce. It means goodwill 80 minus 80, it will become nil. This will be 288 minus 76. It will become 2,12,000. So that is nothing but your recoverable amount. Okay. After impairment loss, revised carrying amount and recoverable amount will be same. That's what has happened over here. That's the first step. Okay. All right. This is about 31st March 20x3 kadra. Next step continued. Suppose by 31st March 20x5. So 2 more years have passed. All right. So 1 second. If 2 more years have passed means that means we need to calculate something. No, sir. Okay. So first we'll find out what is the revised carrying amount of this asset. 2,12,000. Okay. We have used this asset for 2 more years. That means we need to depreciate by 2 more years. 2,80,000. When you initially the life was how much they told? Initially the life was 20 years. 2 years is already passed. That means life remaining is only 18 years. In 2 more years you have already used. That means the depreciation and other assets will be 24. So carrying amount of other assets is 188. Carrying amount of goodwill is fully written off, so you won't have. Other assets carrying amount after 2 more years will become 188. Any problem till here? No. So after 2 more years, what happened? Check. The government reinstates the license. Oh, they cancelled the license. That was an impairment indicator. Now they have reinstated. That means, is that impairment indicator there or it has got reversed? It has got reversed. The management expects favorable change in net cash flows. This is an indicator that impairment loss may have reversed. So they have only told. The recoverable amount of Saturn's net estimates are re-estimated. Value in use are expected to be 3,04,000. Fair value less cost to sell is 290. So recoverable amount is higher of these two, which will be 3,04,000. Okay, people. All right. So that means, can you reverse impairment loss? Yes. Sir, how much impairment? First, First, sir, I think maybe when I said this provision, maybe I did not tell this. Sir, on goodwill, no, if you have charged any impairment loss on goodwill, reversal of impairment loss on goodwill is not permitted. Reversal of impairment loss on goodwill, not permitted. Why, sir? Sir, if you reverse when you charge impairment loss, carrying amount will reduce. You already charged impairment loss and made goodwill to be 0. If you reverse impairment loss, goodwill will increase in balance. Carrying amount of goodwill will increase. Sir, if you increase the carrying amount of goodwill, then it will amount to self-generated goodwill, sir. Self-generated goodwill can you show? No. Only purchased goodwill can be shown. Did you do any business combination here? No. This is a simple reversal of impairment loss. So again, business combination is not done. So if you reverse impairment loss, means goodwill ka balance will be restated. Okay, that will amount to self-generated goodwill. Hence, Ind AS 36 says reversal of impairment loss on goodwill is not permitted under any circumstance. Okay, you cannot reverse it at all. Fine, this is one thing. What about reversal of impairment loss on other assets? On goodwill, you have allocated an impairment loss of 80,000, which cannot be reversed at all. How much on other assets have you charged? 2 years before, you have charged an impairment loss of other assets to the extent of 76,000. This can you reverse? Yes, you can reverse. But entire 76,000 can you reverse? No. There is an upper limit. For charging an impairment loss, there is a lower limit. For reversal of impairment loss, there is an upper limit. What is that limit? Are we talking about individual assets or CGU? We're talking about CGU. What is that limit again, people? I told. There's a 2 limits there. Okay. What is the CGU ka upper limit? CGU ka reversal upper limit. Just for your reference, once again, we'll write because we may have to remember all this. Even if you don't write the provision, at least you need to remember it to solve it. What is upper limit? First, find out carrying amount if no impairment loss was done at all. From the beginning, if impairment loss was not done at all, if this impairment loss ka drama was not there at all, what would have been the carrying amount? First, find out that. 2, find out the recoverable amount, which is given to you in the question. The lower of the 2 will be the upper limit. Okay. To that extent, you can bring up the carrying amount. Okay. At least this much have you understood. Can we find? First, what is that? If you had not done impairment loss at all, what would have been the carrying amount? Okay. Sir, we'll go from the beginning. What is other assets ka value? Goodwill, anyway, we can't reverse the impairment loss, so cut off this. Only other assets ka reversal we can do, so we are only bothered about other assets ka working. From the beginning, initially when you bought, what is other assets ka value? 3,20,000. I just have done it over here, I'll just show you. 3,20,000. Okay, this was which date? You bought this on 1st April 20x1. Correct? Now you are on which date? 31st March 20x5. Count from 1st April 20x1 to 31st March 20x5. X2, X3, X4, X5. 4 years. Correct? No. So 4 years have passed. If you had, after first 2 years, you did an impairment. After another 2 years, reversal is coming in. So standard says, if you had not done impairment loss at all, what would have been the carrying amount? If you had not done the impairment loss, that means you would have used the asset for 4 years. Asset ka value initially was how much? 3,20,000. So reduce the 4 years ka depreciation. 3,20,000 divided by 20 years, that is a total life, into 4 because you have used this asset for 4 years. That means what is the depreciation for 4 years? 64. That means the carrying amount would have been 2,56,000. If you had not done impairment, carrying amount of the asset would have been 2,56,000. But what is the existing carrying amount? Existing carrying amount is only 2,12,000. Existing carrying amount, previously we got it. After, have you actually done impairment? Yes, you have done impairment. After impairment, what is the carrying amount has become? 2,12,000. In fact, 2,12,000 was 2 years before. You have here 1,88,000. In fact, we have got it over here, right? Yes, this was as on 31st March 20x3, 2,12,000. Then you have used the asset for 2 more years. You have reduced 2 more years ka depreciation and carrying amount of the asset has become, actual carrying amount is 188. Actual carrying amount is 188. If impairment loss was not accounted, means carrying amount would have been how much? 256. But have you accounted impairment loss? Yes. That means what is the actual carrying amount? The actual carrying amount is 1,88,000. That means from 188, you can reverse impairment loss and maximum get the carrying amount to be 256. You cannot take the carrying amount of the asset beyond 256 because that is the upper limit. Okay. Currently, it is at 188. Maximum you can bring up is 256. So from 188, you can bring it up to 256. That means how much you can increase the asset by? 68,000. How much did you charge as impairment loss in the previous 2 years before? 76. Though you have charged 76, you can only reverse 68,000. That is what they're trying to say over here. Only 68,000 is possible. Okay, people. So why did you consider recoverable amount here? Recoverable amount was not required because here, sir, if you had not done impairment loss, it would have been 256. Recoverable amount is much higher. I think they gave in the question. 304 and 290. So higher of the two is 304. So this is 304. So the lower is what? 256. Hence I did not bring it. Okay. This is one good question. You need to practice this, people. I can quickly only summarize this question. I can't solve. If we solve all, it will take at least half an hour to go point by point, point by point. Now I can only revise this. Maybe once again, I'll try to tell it in words, see if it makes sense. All right. So this is you had a goodwill. You purchased someone's business. That means you have got a goodwill. Goodwill cannot be done impairment check cannot be done at individual level. So there was a CGU. So you allocated that CGU. They only told there was only one CGU there. So entire goodwill got allocated. Okay. So you did a business combination at 1st April 20x3. 2 years you use the asset. That means first you will calculate depreciation for 2 years. And you will get goodwill. There is no amortization. So value will be same. So you got carrying amount of CGU. After 2 years, what is the recoverable amount they gave? So there was an impairment loss of CGU. So if there is an impairment loss of CGU, we know the allocation rules. First, you will give it to goodwill. So out of this, first you give it to goodwill, balance to the other assets. Other assets, there are many assets. Breakup is not given. So further allocation, we have not bothered. But once you allocate impairment loss, carrying amount will reduce. So we got the revised carrying amount. After 2 years, that is on 31st March 20x3. This is 31st March 20x3. Carrying amount of goodwill has become 0. Other assets has become 2,12,000. Then 2 more years has passed. That is, we are now on 31st March 20x5. Since we've used the asset for 2 more years, this other assets ka balance will further reduce because you have to charge depreciation. So 2,12,000 we have taken and 2 more years ka depreciation we have charged. So the actual carrying amount is 1,88,000. Other assets ka actual carrying amount is 1,88,000. Okay, this is the actual carrying amount. Now on 31st March 20x5, meaning after 4 years, government has restated the license. When earlier they had put a ban. They had put a ban, so it was an impairment indicator. Now they lifted the ban. So lifting of a ban is a reversal of impairment indicator. So if the indicator has got reversed, means can you reverse impairment loss? Yes. If you have charged 76,000 before, entire 76,000 can you reverse, or there is an upper limit? There is an upper limit. What is that upper limit? First find out if there was no impairment loss ka drama at all. What would have been the carrying amount? If you had not done impairment loss at all, what would have been the carrying amount? That is one. Find out the recoverable amount on the same day. The lower of the two will be the upper limit. Here, if you had not done impairment loss in the first place, carrying amount would have been 256. Recoverable amount is 304. So the lower of the two is 256. So from 188 actual carrying amount, maximum you can increase the carrying amount and bring it to 256. From 188, you can bring it only up to 256. So the maximum reversal possible is only 68. Though you have charged 76 impairment loss before, now you can reverse only 68,000. That was this problem ka drama. Okay, hope it's better now. I'm trying my best. Okay, hopefully my best is good enough for you. I'm thinking. Yeah. All right. But again, these are some problems which you need to quickly revise, or little writing practice is required to get to that. These are easy only, but requires a little bit because there's some small mistakes, small little arithmetical errors you can commit in these sort of problems. Okay, I think we'll go for question number 18. One or two more we will solve for this question. Excuse me. Sun Limited is an entity with various subsidiaries. Okay. The entity closes books of accounts every year for the year 31st March. On 1st July, they acquired 80% interest in Pluto. Okay. 80% they've acquired means 80% they got control. So 20% NCA is there. In previous problem, NCA was not there. Here NCA is there. Sun Limited acquired 8 lakh shares. So 8 lakh is for 80%. That means subsidiary company has 10 lakh shares. Out of that 10 lakh, 80% they've acquired. So it is 8 lakh shares. So NCA owns 2 lakh shares. Okay. Sun has acquired 8 lakh shares in Pluto by issuing 2 shares for every 5 shares acquired. Okay. So they are issuing their company ka 2 shares for every 5 acquired. Okay. For 5 shares acquired, they're giving 2 new shares. But how many shares did they acquire of Pluto? 8 lakh. For 8 lakh, how many shares will they acquire? So that's your cross multiplication. So 8 lakh into 2 by 5. How much will be this? So basically Sun Limited will give 3,20,000 its share as purchase consideration to Pluto. Okay. And the value of Sun share is 4 rupees they're saying. So they're issuing 3,20,000 shares and one share ka value is 4 rupees. That means the total value of PC is 12,80,000. This is helpful for our goodwill. You must have given over here. Cost of investment or PC is 12,80,000. All these numbers are in thousands. Okay. Alright. There's an NCA also over here. You know, NCA could be either valued under proportionate share of net asset basis or PSNA basis or fair value basis. Here, what is it? Fair value of Pluto shares is 1.4. Subsidiary company ka fair value per share is 1.4. Cost of issue was 5%. Okay. And we know this business combination says all transaction costs will not be capitalized but transferred off to P&L. So all this cost of issue will go off to P&L. Sun Limited incurred further legal professional cost of 1 lakh. Again, all this also will be transferred off to SPL. The fair value of net assets of Pluto was measured at 1.3 million. So 1 lakh, 1 million is 10 lakhs, so 1.3 million is nothing but 13 lakh. So net asset we got is 13 lakhs, which is expressed in thousands over here. Next, we only need NCI. Sun Limited, the parent, measures NCI using fair value method. Okay, how many shares they have? 2 lakh. Yes, because parent got 8 lakh shares, subsidiary had 10 lakh in total. So out of 10 lakh, if parent owns 8 lakh, NCI will own 2 lakh shares. And what is fair value? 1 share of subsidiary company. Subsidiary company here is Pluto. Pluto ka 1 share ka value they only given as 1.4. NCI owns 2 lakh shares and the value of 1 share is 1.4. So NCI ka value is 2 lakh 80,000. So take a PC, add NCI and deduct net assets, you will get a goodwill of 2 lakh 60,000. That is on the date of control, this is a goodwill, right? This is your basic Ind AS 103 ka calculation. Okay, next what happened? Pluto comprises of 3 cash generating units, A, B, C. Okay, so subsidiary company has 3 CGUs. Now you know. In the previous problem, goodwill was related to only 1 CGU, so straight away we did. Here you have to do some allocation wala drama. When Pluto was acquired, directors estimated that goodwill arising on acquisition could be allocated to units ABC. You can allocate to CGU ABC in 2:2:1 ratio. So they're saying this goodwill of 2,60,000 has to be allocated to 3 CGUs in the ratio of 2:2:1. Okay. The carrying amount of the CGU along with recoverable amount they've given. There's a carrying amount of CGU before goodwill allocation and this is a recoverable amount. Okay. That's what they've given. Now what do you have to do? Normal is first allocate the goodwill, then you'll get the revised carrying amount of CGU. Compare it with recoverable amount of CGU and then see if any impairment loss of CGU is there or not. Yes. But before that, one step study material is doing. Even if you don't do that, answer will be right. But maybe for exam, better to do. What is that is? Check. Before allocation of goodwill, do you know the carrying amount of CGU? Yes. How much? ACCA is 600, recoverable amount is 740. Is there any impairment loss? So before allocation of impairment loss only, they do one impairment loss check and account it. Even if you miss this step, final answer will not change. It will be same. I've showed you to you in class when we did this problem. But in the examination, if you want to sync up with ICA solution, sometimes it's better to do whatever ICA is doing. It's so that for the mark's sake will be better. So check here for B. Carrying amount is 550. Recoverable amount is 650. So that means there is no impairment loss here. This is 450 carrying amount. Recoverable amount is only 400. Here there is an impairment loss of 50. So first institute, we'll do that. Okay. 450 is the carrying amount, recoverable amount is 400, there is an impairment loss of 50. So first 50 ka impairment loss, they'll reduce it off. That's what they've done here. Check carrying amount 600, 550 and they've not taken 450, they have already reduced impairment loss. Even if you don't do this, if you don't do this, final answer will still match, but I suggest do it in exam. Okay, this is carrying amount before allocation of goodwill. How much goodwill you got? 260. Can you allocate goodwill to CGU? Yes. In what ratio? 2:2:1. So 260 you allocate to in 2:2:1. For CGA, 104 will be allocated, these two, like that much. So after you allocate, what about the carrying amount? It already had this much carrying amount. Now we allocated goodwill also. That means carrying amount of the goodwill will change, meaning it will increase. From 600, it will increase by 104, it will become 704. Then these two will increase and this is your revised carrying amount. Basically, these two are addition. Is your revised carrying amount. Okay, sir. Do you know recoverable amount of CGU? Yeah, 740, 650 and 400. Now again do the impairment check. Twice they're doing that. So carrying amount to 704, recoverable amount to 740. So there is no impairment loss. Here carrying amount to 654, impairment loss is, carrying amount to 654, recoverable amount is only 650. So there is an impairment loss of 4. There is an impairment loss relating to CGU. So first you will impairment loss of CGU, you will give it to what? Goodwill. How much goodwill have you allocated? 104. That means out of 4, goodwill balance is 104. Don't write off entire 104. Impairment loss is only 4. No. So entire 4 lakh impairment loss will be given only to goodwill. Okay. Next. For CCA, other assets already has been written off. You just check other assets ka carrying amount already written off. Now further impairment loss if you get, obviously that will be only related to goodwill. Okay. So check. So carrying amount is 452, recoverable amount is only 400. So there is an impairment loss of 52. How much impairment loss goodwill did you allocate? 52. How much is impairment loss? 52. That means entire 52 will be allocated to goodwill itself. So total impairment loss you allocated to goodwill is what? 56. So they are asking revised carrying amount of goodwill. What is the total goodwill? 260. How much total impairment loss you allocated against goodwill? 56. So the revised carrying amount will be 204. So even if you don't do this step, final answer will be same. If you want, you can recheck this. What they are doing, I told, before allocating impairment loss only, first they set off impairment. Before allocation of goodwill, they check if any CGU is impaired. Even if you miss that step, final answer will still be the same. Check. So 450, last step. Maybe if you want, I'll rework this out. Carrying amount, let me take it as 450 only. How much goodwill you will allocate? Still 52 only. That means this will become 502. Okay. Recoverable amount is 400. That means how much will be the impairment loss? Impairment loss will be 102. So out of this 102, first you will allocate the impairment loss to goodwill. How much goodwill was relating to the CGU? 52. So out of 102, 52 will be allocated to goodwill, and then you will allocate the balance, what? 50 to other assets. This 50 will get in final step. That they have done initially only. Okay, that's what they have done. So even if you don't do it, answer will be same, but I suggest you still do it. Okay, so this is about goodwill and CGU ka allocation draft. Okay, sir. Yes, sir. Okay, so let's go for the next one, sir. Question number 20 maybe we'll take up, sir. Okay, yes. Coming back to this question, ABC Limited has 3 cash generating units. ABC. The company has 3 CGUs. The name of the CGU is ABC. Carrying amount of this as follows. Carrying amount of respective CGUs they have given. Useful life also they have given. Okay. Keep in mind, especially when they give you useful life, you need to be a little extra careful. Just check why, I'll tell you. It also had 2 corporate assets. So we already know the drama. For goodwill and corporate assets, they don't generate independent cash flows. Right? So that means you have to test their impairment only at CGU level. So what do you have to do now? In the previous problem, we allocated goodwill. Here we will have to allocate probably corporate assets. They will give you some allocation. We'll see. It has 2 corporate assets with a remaining useful life of 20 years. Corporate asset X and corporate asset Y. 2 corporate assets we have. Carrying amount of those 2 they have given. Corporate asset X can be allocated on a reasonable basis, on a pro rata basis, they say. Okay, in the last problem, clearly they told 2:1 ratio, so we allocated. Here they're saying it can be allocated on a reasonable basis, that is pro rata basis, to individual CGUs. So X you can allocate to CGU is what they are telling. What about Y? Carrying amount of Y cannot be allocated on reasonable basis, it seems. So Y ka carrying amount or corporate asset Y cannot be allocated is what they're saying. So in this case, what to do? So if you remember solving AS 15, accounting standard 15, I don't know, I think now in AS 15, not AS 15 rather, AS 28. In CA intermediate, there was an accounting standard 28. I don't know, at CA intermediate level, the standard was not there or not. I think it was not there for you. It's only recently brought in. Okay. AS 28 talks about this. Okay. What it says is, Ind AS also has the same approach, but the terminology, is better called out in AS 28. What they say is, if goodwill or corporate assets, if you cannot allocate, if goodwill and corporate assets, if you cannot allocate, then you have to test the impairment at 2 levels. You have to do impairment check at 2 levels. First, we call it as bottom-up test. You have to do something called bottom-up test, not bottoms-up. Okay, bottom-up test. Next, you have to do something known as top-down test. You have to do bottom-up test and then you have to do top-down test. Bottom-up test means you check at CGU level if any CGU is impaired. Top-down test means at overall company level, you check if the company is impaired as such. Okay, or you can visualize like this: bottom up, top down. No, bottom, the company is at the top. Okay, CGU is under the company only, right? So CGU ka impairment test we call it as bottom up test. Okay, overall company ka test we call it as top down test. Okay, this terminology is used in AS 28. Ind AS does not have this, but the approach is same. All right. So we'll look at how this particular question works. Good question, good revision question, I would say, because it has quite a few dramas to be done. So first, why we will do it later? Because they said it's not allocable. Can you allocate corporate asset X? Yes. In ratio is given? No. They said on a pro rata basis. First, now this 600, normally your mind is saying what? Sir, why you allocated this corporate asset X of 600, you allocate to CGUs in their carrying amount ratio. Yeah, we would have done that. But if this information was not available, if this useful life information, if it is not available, the 600 I would have allocated in carrying amount ratio. But here they gave useful life also. And moreover, if you check useful life, is it same? No, one is 10, other one is 20. That means you also need to consider life into picture and then only do the allocation. That means if you remember, you can't take simple average here. You have to do weighted average wala allocation here. So take the carrying amount, multiply by life. How much is that? 5,000. Take the carrying amount, multiply by life. Here it is 15,000. Here 1,100 into 20. How much is this, sir? 22,000. Or if you want to simplify the calculation, this is a big number to you. Cut out 1 and 0. Same. Anyway, we want ratio. We don't want the actual number. So this, can I take it as 1:2:2? If you want a smaller number, you can work with this. We can do this easy. So take 500 into 1. It will be 500. 750 into 2, 1,500. 1,100 into 2, 2,200. Okay, do the summation of all that. 500 plus 1500 plus 2200, which is 4200. So basically you have to allocate corporate asset X in the ratio of 500 is to 1500 is to 2200. In this ratio you need to allocate. Okay, that's all it is. So if this live information is given, you also need to consider that for your allocation purpose. Okay, that's all. In the previous problem, you did not do this because this live information was not there. And moreover, in the previous problem, there was only one CGU, so allocation drama was not there. In fact, previous problem, they had only told 2 is to 2 is to 1, so we did. Okay, so here we have to do the allocation in weighted average ratio. Okay, so what is the corporate asset X ka? 600. 600 you all have to allocate in this ratio. That's what they've done here. Check. So in the interest of time, we'll copy it from here. They've given it in percentage. Maybe one I'll show you. So other things we can think. So 600 into 500 divided by 4500. 600 into 500 divided by 4500 gives you 71.42. I think there's some rounded off as 72, like that. The same ratio B and C also they've allocated. So carrying amount before of CGU alone was 500 before corporate asset allocation. Corporate asset, how much you allocate? 72. Before allocation, carrying amount was 500. You allocated a corporate asset 72 X. That means the carrying amount after allocation will be 572. These two addition. Before was 750. You allocated 216. That means carrying amount after allocation is 966. Before allocation 1100. You allocated corporate asset X to this particular CGU to the extent of 312, and this will be 1412. They have found out the percentage and all. Don't worry about percentage. Percentage is this only. If you want percentage calculation, I'll show you also. 500 divided by 4200 if you do. 500 divided by 4200 if you do. That is nothing but your 11.99, which is nothing but 12%. Okay, this number only they're calling it as percentage. Okay, so here if you do 1500 divided by 4200 if you do. This is a ratio, no? And total of all this is 4200. So 1500 divided by 4200 if you do, my calculator is showing 35.71, which they have taken it as 36%. Okay, they have done it in percentage. You can simply keep it at ratio level also. Answer is any which way same. Okay. Alright. So after allocation, carrying amount of all the asset has become 2957. Okay, that we'll copy this. 572 and 966 and 1412. This is that CGU, respective CGU. Alright. So first do one corporate asset Y cannot be allocated. So when Y cannot be allocated, first I told there are two steps. One is what? First check if any CGU is impaired. Do you know the recoverable amount of respective CGU? Yeah, recoverable amount is given in the next table. Recoverable amount of A, B, C. These are CGUs. And overall company also they've given. Because I told you, top-down approach means checking the overall company ka impairment loss. We'll use this information later. Do you know CGU ka respective recoverable amount? Do you know? Yeah, 600, 900 and 1400. Take that. This is a carrying amount. This is a recoverable amount. See, there is impairment loss. Carrying amount is 572. Recoverable amount given is 600. No impairment loss. Here there is an impairment loss of 66. Here there is an impairment loss of 12. Okay, CGU B and C are impaired. Mind you, this is not an asset. This is a CGU B. If a CGU is impaired, you know the allocation rule. First, you will allocate it to what? Goodwill. So here there is no goodwill. That means what? Then to other assets. No, sir. First you allocate it to corporate asset X. Then you allocate to other assets. Don't do that drama. Okay. So whenever a CGU is impaired, first you will allocate the impairment loss to goodwill. Then you will allocate to other assets. Other assets here includes your corporate assets also. So don't apply the same drama of goodwill for corporate assets also. Okay. For goodwill we impair because goodwill is really not an asset, sir. You paid some extra money. Hence Ind AS 103 is saying show it as goodwill. So it is really not an asset. Hence the moment you get a chance, standard is saying write it off first. Alright. But corporate asset is an actual asset. So don't apply goodwill treatment for corporate assets. Okay. So whatever, if you got an impairment loss of 66 over here, no, this you will have to allocate to all the assets in CGUB in their respective carrying amount ratio. So this 66 impairment loss, no people, belongs to what? There are some other assets in CGUB and as well as some corporate asset. One corporate asset X got allocated and there are some other assets. So to both of them you need to allocate. In what ratio? In the carrying amount ratio. What is the carrying amount? Other assets had a carrying amount of 750 and how much corporate asset X you allocated? 216. So this particular 66 has to be allocated in 750 to 216 ratio. So calculate how much it will be. If you want, I'll write it over. This is to X and this is to the other assets of CGU. In what ratio? 1100. We'll directly calculate it over here. So 216. First, okay. First I'll write other assets. It'll be easier. First to the other assets. 66 you'll allocate to other assets as well as corporate asset X. What ratio again? In their respective carrying amount ratio, which is 750 and 216. So allocation will be these two addition. If you do, how much are you getting? 750 plus 216 will be how much? 966. So the allocation will be 66 into 750 divided by 966. 750 plus 216 I've done, which is 966. Okay. So that means 66 into 750 divided by 966 will give me 51.24, which I'll take it as 51. So to other assets, you will give 51. Out of 66, if 51 to this one means balance 15 will be to corporate asset X. So when CGU B was impaired, to corporate asset X, 15 impairment loss will be allocated. Then to the other assets of B, 51 will be allocated. Okay, don't give entire 66 to corporate asset X. This is not a goodwill. Goodwill is a bookish asset. That's the reason we write it off fully. Okay, don't be, this is a little checkpoint you need to be careful. Once more, we will do it for CGU C just to be on the safer side. Okay, CGU C, before allocation of corporate asset, its carrying amount was 1100. And how much corporate asset did you allocate? 312. So what is the ratio of that? 1100 is to 312. This is the ratio. So if any CGU C is impaired, impairment loss will be allocated in the ratio of 1300 is to 312 ratio. Check. Carrying amount of CGU after allocation is 1412. Impairment loss, recoverable amount. Oh, they directly gave, oh no, this should be recoverable amount. Recoverable amount is 1400. Alignment error, that's all. Carrying amount is 1412, recoverable amount is 1400. So that means there is an impairment loss of 12. So CGU C has an impairment loss. CGU C has an impairment loss of 12. What will you do? First, you'll allocate to entire thing, you will give it to corporate asset X? No, you will give it to corporate asset X and to the other assets of CGU in the respective carrying amount ratio. So what is the respective carrying amount ratio? 1100 and 312. Okay. So first to other assets maybe, all right. Then to corporate asset X. So 12 will be allocated in the ratio of 1100. If you add these two, how much are you going to get? 1412. So 1100 divided by 1412. So 12 into 1100 divided by 1412 gives us 9.36. Maybe I'll keep it as 9. So the corporate asset will give it as 3. So other asset we give 9, corporate asset we give it as 3. Okay, this is the first approach. Okay, there's one more step, but once I'll quickly summarize this. So in this problem, there were 3 CGUs and there was 2 corporate assets. One corporate asset you could allocate, another corporate asset you could not allocate. Whatever corporate asset you could allocate, first allocate them. Okay. So if any corporate asset, if it is not allocable, no, you'll have to do the impairment check at 2 level. If any, the same principle holds good for goodwill also. Okay. If they say goodwill is not allocated to CGU, or if corporate asset is not allocated to CGU, you'll have to do the impairment check at 2 level. What is that 2 level? First level, check if any CGU is impaired. First level may check if any CGU is impaired. So you allocate corporate X and then check if any CGU is impaired. If CGU is impaired means that impairment loss you allocated on the respective impairment ratio. First to the goodwill, then to the other assets in the corporate asset ratio, in the carrying amount ratio. So in this case, there was no goodwill. So whatever impairment loss was there, you gave it to other assets and corporate assets in their respective carrying amount ratio. That we have done. Okay. This is the first check. Second checkpoint is at overall company level also you need to do an impairment check. Overall company level means what? Adding all the CGU, adding all the corporate assets. Now check, sir. What was the carrying amount of CGU A? 500. All right. First copy. CGU B before allocation of impairment loss 750. CGU C 1100. Before allocating the corporate assets and impairment loss, this was the CGU ka ABC ka respective carrying amount. And corporate asset X had a 600 and Y 200. Correct. This before allocation I've taken. Now, did we get any impairment loss? Yes, we did CGU level ka impairment loss and we already got impairment loss. So was CGU A impaired? No. So there is no impairment loss. B was impaired? Yes, B was impaired. So when you impaired CGU B, entire to B ka CGU, did you allocate entire 66 impairment loss? No, you gave only 51 towards CGU B ka assets. So reduce 51 from here. What about this 15? This 15 was allocated against corporate asset X. So you reduce 15 from here. They've written 18. We'll see. We have got only now what? 15. So let it be like that. Okay. This was about B. Now CGU C was impaired. How much it was impaired by? 12. Entire 12, did you give it to CGU C ka asset? No, some you allocated to corporate asset X. That means corporate asset got impaired twice through CGU allocation. First at 15 and then at CGU B level and then 3 at CGU C level. So the totally it got impaired to the extent of 18. And CGU C ka other asset got impaired only by 9. So reduce 9. Okay. So at CGU level, you have done impairment check and you have got impairment loss. So this much impairment loss you have got. So reduce that. So after reducing impairment loss at CGU level, what is the revised carrying amount? This. add all this, which is your total. This is overall company ka carrying amount. Because if you add all of this, that is only the company, company ka data. So overall company ka carrying amount is 3072. Do you know the recoverable amount of overall company? They must have given in this problem. They'll give you ABC Limited as company. The overall company ka recoverable amount is 3200. Carrying amount is 3072. Recoverable amount is 3200. So at overall company level, is there any impairment loss? No. So that means that is nil. This was there means again, if there was impairment loss at overall company level, then you will give it to all of them. All of these you will allocate in the respective carrying amount ratio, which is this. If there was impairment loss here, let's say 100, this 100 will be allocated to all other assets A, B, C, X and Y in this particular ratio, revised carrying amount ratio, like that. Okay. So basically at 2 checkpoints you need to do. Okay. About the overall funda, first, if any goodwill or corporate asset, if it is not allocable, first check the impairment loss at CGU level. Okay. And if CGU is impaired, drama is same. First you give the maximum impairment loss to goodwill, then to the other assets in the respective carrying amount ratio. That is first step. Then if any goodwill or if any corporate asset cannot be allocated, means you also have to do the check at overall company level. Okay. So at overall company level, may check the carrying amount of the overall company. Recoverable amount also will be given to you in the question. Then find out the overall impairment loss, if any. In major of the cases, this will be nil. Okay. So this was another problem revolving around this. The concept. Okay. These are good questions, but requires a little practice from your end also, people. Okay, if you have done it, yeah, there's a quick revision, should help you, should be able to retrace the concepts. But if you're doing it for the very first time, then I would suggest take up these questions and practice it 1 or 2 times more. That will definitely help you. All right, next question number 26. India Limited is a manufacturing company that deals in manufacturing cold drinks, blah, blah, blah. There is machinery A in Baroda plant, which is used for the purpose of bottling. There is one more machinery, which is machinery B clubbed with machinery A. A can individually have an output and also have sold independently. That means A can generate independent cash flows. So you can do individual asset ka impairment check. However, machinery B cannot be sold in isolation, and without clubbing with machinery A, it cannot produce output as well. Okay. So machinery B is dependent on A. A can have individual benefits. So that means recoverable amount you can find for A. Recoverable amount for machinery B you can't do it. That's the reason A and B becomes one CGU, because B is dependent on A. So A and B put together probably is one CGU. The company considers this group of assets as CGU with inventory also. Not only these two, there are other assets also. CGU is A, B, inventory of 2 lakh. Goodwill is also there for 1.5 lakh. Mind you, goodwill. Yeah. All right. It is included in such CGU. So the CGU basically has 4 assets. Machinery A, machinery B, inventory and goodwill. They have only told. Okay. So inventory and goodwill ka carrying amount they have given. Machinery ka probably we need to find out. We'll see. Machinery was purchased on 1st April 2013 for 10 lakh. Residual value 50,000. B was purchased on 2015, different dates. Value is 5 lakh, no residual value. Life of both assets is 10 years. Okay. Company expects the following cash flows in the next 5 years pertaining to machinery A. Machinery A, you can generate independent cash flows. No? So future cash flows they've given. But one check, if you just check, excluding residual value, they've told. We already know. How do you get value in use? Value in use is nothing but your present value of future cash flows. Right? This future cash flows includes what? By using how much benefit you will get, also residual value if you are getting, that also should be considered, but they have not considered. This is one hidden adjustment. Does machinery A have a residual value? Yes, it has 50,000. That also needs to be considered for your value in use wala calculation. So why do you need value in use? I'll tell you in a bit. On 31st March 2018, hang on sir. When did you purchase the machinery A? 2013. Now we are on 31st March 2018. So first let's do a thing. So in bigger problem, whenever they give, when you read whole data, it will be a little difficult. Maybe entire problem also you may not be able to do it with full accuracy. So what you have to do, it is anyway they will be giving you marks for the steps. So you purchased the machinery in 1st April 2013. Now we are talking about 31st March 2018. So how many years? 14, 15, 16, 17, 18. 5 years is over. First let's find out the carrying amount. At least that much we can do. If you do that, 1 or 2 marks you will get. So like if this let's say is 10 marker question. For these steps at least you will get 1 or 2. You may not know whole concept, you would have forgotten. At least these small things, if you put 1 or 2 marks, you will get. Something is better than nothing. You know the importance of this, right? Many CA students don't clear their exam because of like that aggregate loss of 5 to 6 marks. So 2 marks in one paper will finally clear the whole group. Okay. So that's what I personally say. Don't skip anything. Don't skip a problem fully. Even if you feel some problems you have not done at all now it's actually even closer to the examination. No, that is not the time to study. That is time to revise. Okay, now anyway, due to postponement, you may get some extra time, so you can do it. But ideally, if you're watching these revision videos at the end and all, the last day and all, it is not the time to learn new things. Okay, whatever you know, you will have to revise. But new things, if at all you come across, at least if you don't want to study them, whatever components, like in this problem, finding the carrying amount is something which is child's play. At least that much we'll put out. That way, let's not skip the whole question. Okay. First, let's do that. How do you get the carrying amount? 10 lakh minus 50,000. Here, that will directly take it to people. Okay. 10 lakh is the this one. Useful life is 10 years. So if you use it, 10 lakh minus 50,000 is 9 lakh 50,000. You'll depreciate over the useful life is 10 years. You've used it for 5 years. So 475 is the total depreciation. Minus 10 lakh will give you carrying amount of 5 lakh 25,000. So after 5 years, the carrying amount of the asset is machinery A is 525. Similarly, let's do it for B. B, you bought it not in 2013, but only 2015. We are on 2018 now. 16, 17, 18. 3 years is over. 5 lakh original cost, no salvage value. Life here also is 10 years. 5 lakh divided by 10 is 50,000 depreciation for 3 years, 150. 5 lakh minus 150 is 3.5 lakh rupees is the carrying amount. This one working, no? Both assets ka carrying amount we have got. Okay. Then this table they have given. This cash flows. Cash flows is nothing but future cash flows, which is helpful for your value in use calculation. Let's calculate. This is your cash flows they have taken, but they've excluded residual value. You also need to include the residual value. Okay. Discount factor somewhere they've given in the problem. You must check some. They don't give all the data in one go. Here, borrowing rate is 10%. So discounted at 10%. If you discount it, you're going to get 489,650. There's nothing but your value in use of machinery A. So why are you doing this, sir? Because we are doing impairment check of CGU. Hang on. I'll tell you. This is a value in use relating to only machinery A, not for the CGU, only A. Okay, this much we can do it. All right. 31st March 2018, professional valuers have estimated the current market value of machinery A alone. They said value of this machinery is 7 lakh. So if you sell it, you will get 7 lakh is what they say. Is this the recoverable amount? No. Recoverable amount is fair value less cost to sell. 7 lakh is a fair value. We don't want fair value. We want fair value less cost to sell. Valuation fee is 1 lakh. Valuation fees is not cost to sell. So ignore that. There is a need to dismantle the machinery before delivering. Maybe the machinery is big. Okay, it cannot be delivered in one go. So you have to dismantle it, make it into a smaller piece, and then sell it. So there is a dismantling cost of 1.5 lakh. So this is a selling cost, reduce it. Here, fair value 7 lakh, reduce dismantling cost of 150. Then specialized packing cost is 25, legal fees is 25,000. So reduce these two. So you'll get fair value less cost to sell. Value in use is 489. Fair value less cost to sell is 450. So recoverable amount is higher of the two, which will be 489,650. This is your recoverable amount. Carrying amount we already found out here only. Carrying amount of machinery A is 525. Carrying amount is 525 of machinery A alone. Keep in mind, this is only machinery A, not CGU. Carrying amount of machinery A is 525. Recoverable amount is 489. So is there any impairment loss? Yes, only relating to machinery A. How much? 35, 530. This is impairment loss relating to only machinery A, not CGU. 35, 530. Because data was given, so we calculated limits. Done, people. Okay, this is fine. Next, what they told. The inventory has been valued according to Ind AS 2. The recoverable amount of CGU is only 10 lakhs. Recoverable amount of machinery A alone. Recoverable amount of CGU is 10 lakhs. Okay. As on 31st March 2018. Great. The next year, company has done the assessment of recoverable amount of CGU and found that 11 lakh on 31st March 2019. Leave that out. That is probably a reversal. We'll see that later. First, we will do the impairment loss wala calculation. Okay. Now CGU. First, what is the carrying amount? What is the carrying amount? CGU means what and all it had. It had machinery A, machinery B, and then it had some goodwill, and then it had some inventory. We are doing impairment check on 31st March 2018. So what is the carrying amount of machinery A on 31st March 2018? 525. Machinery B is 350. Goodwill I think they gave before only, which is how much? Goodwill is 1.5 and inventory is 2 lakhs. Yes. Goodwill is 1.5 and this is 2 lakhs. So total carrying amount will be how much? 525 plus 350 plus 3.5. That will be 8,78,500. You don't have to copy. Everything is given over here. 8,78,500. Somewhere they must have given. Where is that? Okay. Leave. We're not there. Right? We did totaling wrong. Here. 12 lakh. 5,25,000. 1 second. 5,25,000 plus 3,50,000 plus 3,50,000. Yeah, it's actually 12. My bad. Totaling error. It's actually 12,25,000. So carrying here they've given. Carrying amount of CGU is 12,25,000. Okay. Now we are doing at CGU level. This is a total carrying amount. Sir, do you know the recoverable amount of CGU on the same day? Yeah, it's given in the question. Recoverable amount of CGU, they given it as 10 lakh. Carrying amount of CGU is 12,25,000. Recoverable amount is only 10 lakh. So is there any impairment loss of CGU? Yes, 2,25,000. That's the first thing. Okay, sir. Yeah. This is a CGU, and you know the impairment loss allocation of CGU. First, it will be allocated to what? Goodwill. Maximum possible impairment loss will give it to goodwill because it's a bookish asset. So how much is the goodwill? 1,50,000. So out of 225, 1,50,000 will be straight away given to goodwill. Then other assets. Now you need to keep in mind, other assets means what? There are three: machinery. This is machinery A. This is machinery B, right? First one is machinery A, and this is machinery B. And then there is inventory. Sir, inventory is accounted as per AS 22 or AS 22, AS Ind AS 2 rather. Yes. So when we say, in fact, what is allocation rule? Maybe I'll write that down. Impairment loss of CGU allocation rules is first you allocate to goodwill and then to the other assets. Sir, other assets here means only intangible assets and property, plant and equipment. Not, in fact, we'll write the exclusions. That will be easier. Other assets here, people, excludes your inventory, your financial assets like your debtors, etc., etc. Inventory is accounted as per Ind AS 2. Okay, so we know inventory should be valued at cost or NRV, whichever is lower. So NRV is a substitute for your recoverable amount. That means impairment loss should not be allocated to inventory and all. And debtors ka impairment and all, no financial instrument. Ind AS 109 gives comprehensive treatment. So for financial assets, for your inventory and all, you should not allocate impairment loss. That means, will you allocate impairment loss to any inventory here? No. If the debtors was there, you would have allocated any impairment loss to debtors? No. For any liabilities, you would have allocated impairment loss? No. That means you will allocate impairment loss only to what? When we say other assets here, other assets simply means property, plant and equipment and intangible assets. So this particular other assets, here your impairment loss you will allocate only to A and B and not inventory. Understood that? So this, how much is others basically? In 225, 1.5 you give it to this means 75,000 you will give it to other assets. Other assets here means excluding inventory, what other asset remains? Debtors was not there, we remained it. So again, just to retrace, if the CGU have some inventory, debtors or some liabilities, you will not allocate any impairment loss to them. Impairment loss you will only allocate it to tangible and intangible assets. Okay. So here tangible and intangible asset is not there. In fact, goodwill was one thing which we wrote off already. A and B is the remaining. What do we do? Normally this 75,000, I'll write it here, don't copy, just check. This 75,000, other assets will allocate in the carrying amount ratio. What is the carrying amount of A and B? 525 is to 325. 525 is to 350, correct? In fact, I'll write 525 is to 350. So if you allocate, how much will you get, sir? A will be what? 75,000 into 525. Summation of this is how much? 875. Huh? So 75,000 into 525 divided by 875 gives you an impairment loss of how much? 45,000. Okay, for A. That means for machinery B, it will be how much? The balance, 30,000. Correct? Huh? Okay. Sir, what was the carrying amount of machinery A before impairment loss? We already found out. Before impairment loss, machinery A ka carrying amount was 525. How much impairment loss as per this rule you are getting? 45. That means 525 minus 45 is how much? 4,80,000. So the revised carrying amount after impairment loss will be 4,80,000. Correct? But hang on. Do you know machinery A ka value in use and fair value less cost to sell? Yes. Value in use was 489. Fair value less cost to sell was 450. That means what is its recoverable amount? A ka recoverable amount is 489. That means what? When you did individual impairment loss of machinery A, how much impairment loss you got? 35,350. But if you do it in your normal CGU allocation ratio, you are not getting 35, you are getting 45. That means if you do it in the normal ratio, you will be allocating higher impairment loss. So this should not be allocated because you will be giving more impairment loss to one asset which is not really impaired. Because see, if you do this, its revised carrying amount, revised carrying amount you're getting is 480. But what is its recoverable amount? Recoverable amount here is what? A ka recoverable amount is 489,650. Right? A ka recoverable amount is 489,650. That will be wrong now, people. You can recover 489, but after impairment loss, you're showing carrying amount to be 480. What's the simple rule of impairment loss? After impairment loss ka allocation, carrying amount and recoverable amount should be same. Here, carrying amount after impairment loss is 480, recoverable amount is 489. That means unnecessarily for A, you have given higher impairment loss. So you should not do that. That is the reason they gave machinery A ka data. Meaning, you don't have to do any allocation drama over here. You already know A is impaired maximum how much extent? 35,350. Straight away copy. Out of 75,000, 35,350 straight away allocate to A. So in 75,000, 35,350 you allocate to A. How much remains? 39,650. That you give to B. So to do this only, they gave A ka drama. If they had not given A ka asset ka value, if they had not given recoverable amount of A and all, no, I would have not done like this. I would have done it in the normal way, like here. Okay, I would have allocated in the ratio and done this. Because they gave some extra data for machinery A. Alright, so that's the reason we'll have to forcefully do like this. Okay, so out of 75,000, A is impaired. We already calculated impairment loss of A, which is only 35. Only 35,000 will be given to A. If you give more, you're giving unnecessary extra impairment loss, which is going against the allocation rules. That is the reason. Okay, balance you will give it off to B. That wala questions is easy only, but you need to. There are some chances of doing a mistake on the last step. Rest everything you'll do it around say. Okay, last step you need to be a little careful on. So if any asset ka extra data is given, and if you can find out the impairment loss of that, you will restrict the impairment loss only to that extent, not beyond that. That was the takeaway of this particular problem. That's what they're trying to say over here. They must have given somewhere here. Okay, yeah, that's all. Yeah, that's what they've given over here. So obviously, when you allocate impairment loss, carrying amount again will change. Before allocation of impairment loss, it was 525. When you allocated impairment loss, it became this much. So carrying amount became 10 lakh because recoverable amount of CG is also 10 lakh. This is year 1 ka drama. Then one more year passed. Sir, one more year passed means you would have used the asset. You would have used the asset means you would have depreciated the asset. Yes, no? So that's what they've calculated the depreciation for. 489 minus 50,000. 10 years was the useful life. 5 years is already over. So remaining life is 5. So they've calculated one more year ka depreciation and got the carrying amount. Same for machinery A and B. Goodwill is 2 lakh. Inventory is 2 lakh. Goodwill is 0 because goodwill is already written off. So after one more year, revised carrying amount is 867, 734. Any problem till here? No. So in this particular year, in year something, 31st March 2018, I think this was, yes. Yeah, in 31st March 2018, you did impairment loss, and after impairment loss, this was the carrying amount. And one more year passed. Thus on 31st March 2019, 1 year has passed. So you have used the asset for 1 year. So you have deducted 1 year ka depreciation and got the revised carrying amount. So why are you doing for next year? They've given a little extra dama, one last step. What is that? Check. In the next year, that is 31st March 2019, we already have got the carrying amount, actual carrying amount. Yeah, company has done assessment of recoverable amount and found that the recoverable amount has become 11 lakh. Now they're saying recoverable amount has become 11 lakh. Okay, fine now. So now they are saying recoverable carrying amount is 861, 867. This is actual carrying amount, right? Actual carrying amount is 867, 734. Recoverable amount has become 11. That means indirectly they're saying reversal. When carrying amount was greater than recoverable amount, you did an impairment loss. When it's other way around in the next year, that means you can reverse impairment loss. So whatever impairment loss you book, can you reverse? No. Impairment loss on booked on goodwill can never be reversed. On other assets also, left, right, center, can you book? No. There is an upper limit. What is that upper limit? If you had not done impairment loss at all from the day one, what would have been the carrying amount? Okay, first find out. Yes, no, people, that is what is the next step. If you had not done impairment loss from the year beginning, you bought the machinery A for 10 lakh. There is a residual value of 50,000. So deduct that. Useful life was how much year? 10 years. 6 years was already passed over here. Yes, no, correct? From if you count it, I think you bought this asset machinery A on 1st April 2013. Maybe I'll give you the dates over here. You bought the machinery on 1st April 2013. Now you're on 31st March 2019. So if we count 14, 15, 16, 17, 18, 19. So if there was no impairment wala drama, you would have depreciated this asset for 6 years. So deduct 6 years ka depreciation. What is the carrying amount? 430. Same for machinery B. You bought it on 1st April 2015. Now you are on 31st March 2019. So count 16, 17, 18, 19. 4 years. So there is no residual value. You bought it for 5 lakh minus 0 divided by 10 into 4 years because 4 years ka depreciation. If you reduce 4 years of depreciation, its carrying amount is 3 lakh. Okay. Good inventory is okay. Inventory value we're not touching only. We did not allocate any impairment loss. From the beginning, it is 2 lakh only. We have assumed no other value they have given. So we have taken the same. Goodwill, we can't reverse. We have already charged impairment loss and made it as 0. So it remains the same. That means if you had not charged impairment loss at all, the CGU ka carrying amount would have become 930. From day one, if you had not done impairment loss, carrying amount of CGU would have become 930. But now, have you done impairment loss? Yes. That means what is the actual carrying amount? Actual carrying amount is 867. If you had not done impairment loss from the beginning, its carrying amount would have been 930. That means from 867, maximum you can bring it up to 930. 930 is your upper limit. Okay, people. All right. So that means how much can you reverse? From 867, you can 9,30,000 minus 867, 734. That gives you 62,666. Only that much of impairment loss you can reverse. Fully you cannot reverse. You have charged more impairment loss. In fact, you have charged impairment loss of some 77. I think we saw somewhere here. No? Totally impairment loss on other assets you have charged 75. Entire 75 can you reverse? No, you can reverse only 62,266. Okay. So this much only you can reverse. Overall drama is this. Okay. Again, maybe quickly I'll tell summarize this particular pointer one thing. So there was no good. There was one CGU over here, and that CGU had machinery A, B, inventory, and goodwill. Now, whenever you see assets like inventory and financial assets, current assets or current liability, don't allocate impairment loss to them because there are other standards which talks about it. For financial assets, financial liability, impairment loss treatment, Ind AS 109 talks about. For inventory, Ind AS 2 talks about. So you can't allocate impairment loss to such assets. Basically, impairment loss you can only give it to what? Goodwill and what? Basically your tangible assets like PP and intangible assets. That's all. So this particular CGU had impaired. You found out the carrying amount of CGU. You had recoverable amount. Okay. So first you gave the impairment loss to goodwill. Then the two assets were remaining, A and B. But machinery A was capable of generating independent cash flows. A ka carrying amount was given. Recoverable amount also you could find out. They have given. That means first find out what is the impairment loss relating to A. In this case, impairment loss relating to A was 35,350. How much is the impairment loss relating to other assets after writing off goodwill? 75. Normally the 75,000 you give it to other assets in their carrying amount ratio. But in this problem, you have data to compute impairment loss relating to machinery A alone, which is what? 35. Hence, you don't do that ratio approach. Out of 75, straight away you give 35,350 to A. Balance you will give it off to B. That is one round. Okay, so after allocation of impairment loss, obviously carrying amount will reduce. This is 31st March 2018 ka drama. One more year you use the asset. One more year if you use the asset means deduct one more year ka depreciation, and this is the carrying amount. So this is the actual carrying amount. Next year what happened? Impairment indicator has got reversed. That means impairment loss also can you reverse? Yes. But there is any left, right, center full amount can you reverse, or there is an upper limit? There is an upper limit. What is that upper limit? Upper limit is what? There is a CGU. The upper limit is what would be the carrying amount if you had not charged impairment loss from the beginning? If you had not charged impairment loss from the beginning means the carrying amount of CGU would have been 930. So from 867 maximum you can bring it up to 930, not beyond that. That means you can reverse only the difference between these two. Difference between these two if you calculate it is 62 to 66. Only that much you can reverse, nothing beyond that. Okay, that's the takeaway of this particular question. Okay. Okay, sir. So I'll do a thing. I think there are one or two more questions. This is pretty straightforward. I think I'll just tell you what this is all about. You know, sir, impairment loss, what do you do? Normal asset ka CGU nahi. If there is one asset, if there is impairment loss, where will you transfer this impairment loss? Will you transfer it to SPL? No. First, you will adjust impairment loss with revaluation surplus. If this asset was revalued earlier, and if you have any revaluation surplus, you first have to set it off with revaluation surplus. Balance impairment loss only will go off to P&L. That wala question this is. Here in this question, you will get an impairment loss of 71,730. 71. Pretty straightforward calculation, no drama. Okay, but they also mention in the problem that this asset was revalued earlier and you had a revaluation surplus balance of 36,000. So entire 71,770 you will not transfer it to SPL. Out of this first 36,000 you will set off with revaluation surplus. Balance will be 35,770. That much only will be transferred off to P&L. This was an RTP May 2020 question. Pretty straightforward calculation. Don't judge this question by the length of the question. Okay. So say questions are meant to be 1 pages, 2 pages many times. Solution will be pretty straightforward only. Okay. Yeah. So you can go through this once if you want. Okay. That's all was the drama about this. Maybe one more, I think 2 more questions are there. This is a consolidation come impairment wala question. So this combination questions when they come, no, they are little important for examination because we know institute know right now what sir, 100 marks ka paper in the 30 marks is MCQ. Remaining is only 70. Institute can ask questions only to the extent of 70 marks, but we have almost 30 plus standards, 30 plus topics almost. Yes, we have 30 plus topics and only 70 marks to ask. If you do 70 marks mathematics also, maybe it will be what sir, if you count everything also, maybe some 7 or 8 questions maximum will be there other than MCQ question. Yes, no, if you do all the parts also, maybe at best 10. So 10 questions to ask, 30 topics to choose from, right? So big headache, right? Which to choose, which to leave. So whenever there is a combination questions, if multiple standards can be clubbed together and ask the question, such question institute would probably like to target is what I personally feel. So if standard question is targeting multiple standards, that you should prioritize a little bit in my opinion. Okay. So this is one such question. This targets impairment as well as consolidation. Both the things are getting kind of targeted over here. Okay. We'll learn. It's easy only. Looks a little fancy, but pretty straightforward. One, if you know, I think we have 2 questions in study mat relating to this. So for we can solve this. We'll solve this and then take a break in case you're wondering. I know that you've been patiently sitting for some time now. Okay. Your mind must be saying, your mind, heart, kidney, everything is saying sapadu, sapadu, sapadu. Yeah, food. Yeah, I know that food is this thing. But yeah, I'll just finish off this and probably give you a break. Excuse me. So that the standard will be over. Next, after lunch break and all, a little difficult to sit with bari standards. So we'll take up little easy standards and kind of wind up the day. Okay, that's the plan. Yeah. So A Limited acquired 80% shares in subsidiary B. So 80% parent is acquired means NCI has about 20%. And this is the PC or investment cost paid, 3,200. All the numbers are in thousands. And the date of acquisition, net assets was 3,000. AA, that is the parent, elects to measure NCA at proportionate share of net identifier basis. That means NCA is measured under PSNA basis. Okay, it recognizes this. Goodwill calculation. PC is how much? 3,200. NCA will be what? What is the net asset? 3,000. 3,000 ka 20% is 600. Okay, addition of these two and deduct the net assets. You'll get goodwill of what? Goodwill on the date of control is 800. That is what they only, it's not solution. They only given this in the question. At the end of next financial year, okay, B ka carrying amount is reduced to 2,700. So the carrying amount of assets is only 2,700 and this excludes goodwill. Okay, fine. From 3,000 it has become 2,700. Fair enough. Recoverable amount of B assets is, they've given two cases, 2,000 in first case, 2,800 in second case. First we'll do one case, we'll understand that. On similar lines we can do case number 2 also. Okay, carrying amount is 2,700. I think we can straight away go through this, pretty straightforward. So carrying amount is 2,700 of other assets. What about goodwill? Have they told we have multiple CGUs, we have to allocate to blah 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 blah? No, that means only one CGU is there. That has other assets also, that has CGU also. So allocate. Okay, so goodwill portion is 800, other asset portion is 2,700. Put together, CGU ka carrying amount is 3,500. Okay, 1 second. Alright, this is a carrying amount. Do you want the recoverable amount? Yes, recoverable amount is 2,000. Now, one problem is there, people. You know what that one problem is? One problem is with respect to goodwill. Goodwill. What is this drama is? Sir, you know this, we have done in consolidation, if you remember. If NCI is valued under PSNA basis, proportionate share of net asset basis, then the value of goodwill that you get here, they have got goodwill of 800. No, that is not full goodwill. It is only parent's share of goodwill. That means this represents only 80%. Yes, we have studied this. Yes. So if NCI is valued under PSNA basis, the goodwill that you get is not full goodwill. It is only parent's share of goodwill, which is 80%. Okay. So that you have added, right? Okay. But recoverable amount that you see in the question, do you know the recoverable amount in the question? Yes, recoverable amount 2,000 in the first case. No, that recoverable amount you see in the question, no, it is not 80%. It is 100%. If you sell this entire unit, how much you're going to get? That is your recoverable amount. Yes. So recoverable amount is there on which platform? 100% platform. But assets have you shown at 100% platform or 80% platform? This other assets not a problem. It is shown at 100% platform. But this goodwill, have you recorded full or only 80%? Only 80% because NCI is valued under PSNA basis. That means you will only get parent share of goodwill and parent share is 80%. And it will be wrong, no, sir. So to do impairment loss, what do? You compare carrying amount with recoverable amount. Recoverable amount is on 100% platform. Carrying amount is only on 80% platform. So straight away comparing would be right or incorrect? It will be incorrect. Hence in this case, only in this case, always watch out. NCI valued under PSNA basis. Whenever they give you this problem, okay, you have to do this particular step. So in these problem, so if you want to compare, you have to get it to same platform. One recoverable amount is on 100% platform, carrying amount is on 80% platform. Okay, so that means you have to get everything to same platform, which is 100%. So in these case, what do we do is recognize something called notional goodwill. Recognize something called notional goodwill. I've given you some steps also in the class we have done. So I'll not go into that. Quickly, I'll try to summarize this. So you have to recognize something called notional goodwill. So what is that? It's very simple. Okay. Sir, you have recognized a goodwill of how much? 800. This represents 100% or only 80%? It is 80%. But we want how much goodwill? 100% goodwill. For 100%, how much? So 800 is for 80%. For 100%, how much? It is 1000. That means the total goodwill you should have recognized is 1000. But you have recognized only 800. That means how much notional goodwill you need to recognize? 200. Or you can write it like this also. 800 is for 80%. 80% is for parent share. No? Only parent share of goodwill you have recognized. NCA share of goodwill you are not recognized, and NCA owns 20%. So for 20%, how much? If you calculate that, that will be what? 800 into 20 divided by 80. That will be 200. So this is your notional goodwill that we are talking. Notional goodwill is nothing but your NCA share of goodwill. So add a notional share of goodwill. This is only for the sake of accounting. I'll show you. Okay. So 800 plus 200 you do. That means goodwill will become 1000. Other assets you have recognized fully. That is 2700. No problem. So by adding these two, you're going to get how much? 3700. So goodwill also you have recognized 100%. Other assets also 100%. That means this 3700 is now on what platform? 100% platform. The recoverable amount is already there. It's given in the question in the first case is 2000. That is already there on 100% platform. Now you can compare into the allocation. That is the right way. This is okay. Fine. Once again, maybe I'll tell you here. So whenever NCA is valued under PSNA basis, the goodwill that you get is only parent share of goodwill. Here parent share is only 80%. So this 800 what you have recognized is not 100%, is only 80%. But the recoverable amount given in the question is for 100%. So that means straight away you can't compare. One is on 80, carrying amount is on 80% platform, recoverable amount is on 100% platform. So that means you have to record some notional goodwill to get the carrying amount to 100% platform. That notional goodwill is like this only. 800 is for 80%, for 20% how much? Or you can also calculate it 100% level also, your call. Alright. So now the revised carrying amount is 3700. This is only notional. Don't pass any journal entry for this. This is only for impairment loss ka calculation this is done. Okay. We don't record 200 people. Okay. This is only for impairment loss ka accounting. I mean calculation we are doing this. So carrying amount is 3700. Recoverable amount is 2000. That means is there any impairment loss? Yes. Carrying amount is greater than recoverable amount by 1700. So impairment loss is 1700, and you know the impairment loss allocation rules. What is the impairment loss? First you will allocate it to goodwill. Okay, in this 1700, how much relates to goodwill? 1000. That means how much relates to other assets? 700. So 700 relates to other assets. 1000 relates to goodwill. But don't book 1000 of goodwill. Why? Sir, this 200 have you recognized or it is notional? It's only for calculation. So if you book 1000, it will be wrong. 800 you have recognized goodwill, 1000 can you recognize impairment loss? Oh no, that means goodwill balance will become negative. So that is wrong. That means you will restrict it to 800. Or a better way of calculation for this, it will help you is always calculate like this. That will help you in next step. What is that? Sir, you can, what is the actual impairment loss you're getting? Here, out of 1700, towards goodwill you have to allocate 1000, other assets you have to allocate 700. Okay. Now, you can recognize impairment loss of 1000 on goodwill. Entire 1000 you can recognize, provided goodwill you have recorded at full value. What is the full value of goodwill? 1000. If goodwill you have recognized at full carrying amount, which is 1000, then impairment loss also you can recognize full, which is 1000. Okay. But goodwill have you recognized at 1000 or only 800? Actually, you have recorded only 800. 200 is notional. So if you have recorded only 800 worth of goodwill, how much impairment loss on goodwill also can you record? Like this. Always do this calculation. Why? I'll tell you in the next part. This is easier. I know here in this problem, it's straightforward. Without putting this table also, you will get it. But the next one, it will become easier. Maybe once I'll repeat this part once again. Okay. If through this calculation, you are getting goodwill, how much? Impairment loss relating to goodwill is 1000. You can recognize impairment loss on goodwill to the extent of 1000, provided you have recognized full value of goodwill. What is the full value of goodwill? 1000. If you have recognized full value of goodwill of 1000, entire impairment loss of 1000 also you can recognize. But you have not recorded 1000 as the goodwill carrying amount. Actual carrying amount of goodwill you have shown in your books is only 800 because 200 is notional. So if you have recorded only 800 means how much impairment loss can you book, which will be 800. So 800 impairment loss you reduce. You booked 800, you reduced 800 as impairment loss, so carrying amount will become 0. Like this is the first step. Easy. Yes. Now they're saying how much will NCI bear and all. What is NCI share ka loss and all. So if it's only parent share of goodwill, we know this. If you only get, if NCI is valued under PSNA basis, the goodwill that you get is only relating to parent share. And if there's any impairment loss on goodwill, only parent will bear it. How much is the impairment loss on goodwill here? 800. Entire thing parent only will bear it. When your consolidation financial statements, when you prepare, you put up various working notes. No? So the impairment loss will only be given in parent's other equity wala working note. Yes. Alright. NCI will not bear anything. What about other assets ka impairment loss of 700? That both parent and NCI has to bear. Parent will bear in the ratio of 80%, NCI in the ratio of 20%. So other ratio of 700, you allocated an 80-20 ratio. 7 8s are 56. So parent share of impairment loss is 560 on other assets. NCI share is 140. Like this. This is what? One more extra there was. This is pretty straightforward. Yes. Okay. Now the case 2. Little interesting. What if same data? What if recoverable amount is 2800? Now we know that recoverable amount is always for 100%. If you sell the whole CGU, how much you will get? So that is for 100%. Instead of 2000, independent case this is. What if it is 2800? So let's do the same calculation. How much impairment goodwill have you recognized? Actually 800 only. And this 800 we know, is it 100% or only 80%? NCI is valued under PSNA basis. So goodwill is only parent share of goodwill. So it is 80%. Other assets still 2700, 3500. This 3500 is on which platform? It is only 80% ka platform. Because goodwill is not recorded full, it is only recorded to the extent of 80%. Hence what we have to do? Record notional goodwill of 20%. That will be what? Same value, 200. So the total value will become, total value of goodwill including notional goodwill will become 1000. Other assets, no problem, same 2700. So carrying amount will become 3700. So this is your carrying amount. Now recoverable amount. This is now at 100% platform. This also is now at 100% platform. Recoverable amount is 2,800. This carrying amount 3,700. Recoverable amount 2,800. So is there any impairment loss? Yes, there is an impairment loss of 900. Yes, sir. Correct. Now that table will help you there. Okay. So entire 900 is an impairment loss relating to goodwill. Don't book off entire 900. Okay. Always prorate. Now the same drama. You can. This 900 is entirely relating to goodwill, you know, because goodwill value is 1,000. So this entire 900 relates to goodwill only. That means is other assets impaired? No. So entire thing has to be allocated to goodwill only. But how much is the question? Always you have to prorate. Same step. Sir, you can recognize full impairment loss. How much is the full impairment loss on goodwill? 900. You can recognize full impairment loss of 900 provided you have recorded a full goodwill of 1,000. If you have shown full goodwill of 1,000, you can record full impairment loss of 900. But have you recorded full goodwill? No, you've only recorded 800. If you only recorded 800 worth carrying amount of goodwill means how much impairment loss can you recognize? That will a proration. In the previous case, even if you don't prorate, you can still aramse solve. In the second case, proration, this particular dabba or box is very important. Okay. So calculate X here. If you prorate, you'll get 720. So only 720 worth of impairment loss you will recognize. Not 800, only 720. Okay. So goodwill recognized is what? 1,000? No. This 200 is notional. Goodwill recognized is 800. You booked an impairment loss of 720. So the carrying amount remaining is 80. So in this case, who will bear? Other assets is not impaired. Only goodwill is impaired by 720. NCA is valued under PSNA basis. That means the goodwill you get is only parent share of goodwill and only parent will bear that impairment loss. So entire impairment loss, only parent will bear. NCA share of impairment loss is nothing in this particular case. Okay. So do not forget this dabba. Keep this in mind and do the allocation. It's pretty straightforward. Okay. So that was this question. The next question is also pretty much same on this particular lines only. Okay. Maybe in 5 minutes quickly we'll run through and then we'll wind up for the day. Okay. Excuse me. Parent acquires 80% in subsidiary, and mind you people, you'll do all this drama, whatever we did, no, that you'll do only when NCA is valued under PSNA basis. If NCA is valued under fair value basis, you don't have to do anything, because if NCA is valued under fair value basis, that means the value of goodwill you're going to get is full goodwill. That means this notional goodwill accounting and all will not come when NCA is valued under fair value method. The notional goodwill will only come into picture where NCA is valued under PSNA basis, proportionate share of net asset basis. So here also parent has 80% and they bought it for 2,100. At the date, subsidiary net assets was 1,500. Parent chooses to measure NCA and PSNA basis given. So that means that notional goodwill drama again will play out. The assets of subsidiary together are the smallest group of assets that generate cash flows, are largely independent. They're saying subsidiary assets put together is one CGU. Within the subsidiary asset, there is no further sub CGUs. The whole subsidiary is one CGU is what they're trying to say. Okay. This line is important. Since other cash generating units of parent are expected to benefit from synergies of combination, normally they do business combination because they see cost benefit, market share expansion, etc., etc. Okay. So they are saying, so other cash generating units of parents are expected to benefit from synergies of combination. The goodwill of 500. One second. So first we'll calculate goodwill. So how much is goodwill? PC you paid 2,100. So net asset is 1,500. NCA is PSNA basis. So net asset is 1,500. 1,500 got 20% is NCA 300. So goodwill you got is 900. Okay, when you did subsidiary business combination, you got a goodwill of 900. Now what they're saying is, since the other cash generating units of parent are expected to benefit from synergies of combination, the goodwill of 500 relating to those synergies has been allocated to other CGU. Okay, now in the previous problem, you got a goodwill. Entire goodwill you gave it to subsidiary CGU only. Okay, but in this problem, they are saying we're doing here probably from your subsidiary consolidation viewpoint. Okay, so we have parent CGU. And we have subsidiary ka CGU. Subsidiary ka all assets put together is one CGU. Okay. Now when you did subsidiary consolidation, you got a goodwill of 900. They are saying don't allocate. Goodwill has to be allocated to CGU. They are saying when you're doing CFS perspective, don't allocate entire 900 goodwill to CGU or subsidiary ka CGU alone, because even parent ka CGU is getting benefited through this business combination. So indirectly they're saying what? The goodwill of 500 relating to those synergies have been allocated to other CGU within the parent. That means they're saying out of total goodwill of 900, they're saying allocate 500 to parent ka CGU and 400 to subsidiary ka CGU. Don't take entire 900 and do the working. Take only 400 and do the working for next working is what they're trying to say. That's all. That's all is extra fitting. Rest everything is a ditto. Okay. Two CGUs allocate to parent ka CGU 500, subsidiary ka is 400. I'm not telling problem 2, which we did. Yes. Okay. Then what's it? The carrying amount of net assets of subsidiary. Maybe only subsidiary ka CGU is impaired. That's the reason we are doing impairment check there. Carrying amount of net assets of subsidiary excluding goodwill is 1350. Allocate impairment loss. Same drama. Okay. subsidiary ka CGU other assets is how much? Net asset is 1350. This includes goodwill or excludes goodwill? There is the word excluding goodwill. So how much goodwill? Entire 900 we should take. No. We should only take 400. Okay. But mind you, this goodwill is full goodwill or only parent share of goodwill? Only parent share of goodwill, because NCA is valued under PSNA basis. That means this goodwill represents only 80%. Okay. How much is recoverable amount? Somewhere they must have given no. Where is recoverable amount? Here. Parent determines recoverable amount of CGU subsidiary is 1000. So recoverable amount is given to be 1000. It's given in the question. This 1000 is on which platform? 100% ka platform. But the carrying amount of 1750 is on 80% ka platform, because goodwill is not recognized in full. Goodwill is recognized only to the extent of 80%. Hence what we have to do. For 80%, if it is 400, for 100%, how much? If you prorate, you will get 500. Or you can also say 400 is for 80%. Notional goodwill represents 20%. No? For 20%, how much? So 400 into 20 divided by 80, if you do, you're going to get 100. So 100 are we accounting or only notional? Only notional. That means goodwill amount will become 500. Other assets 1350 only. So that means the revised carrying amount will become 1850. This is 100%. 100% carrying amount is 1850. Recoverable amount is 1000. That means impairment loss is how much? 850. Okay, now it's the same drama. Out of impairment loss of 800 relating to goodwill, impairment loss related to goodwill is how much? 500. Other assets will be 350. Yes, no? Okay, so that's what they must have given in the next step. So 500 and 350, correct? Or maybe we'll do this. So can you give entire impairment loss of the goodwill? Impairment loss relating to goodwill is 500, but can you book impairment loss relating to goodwill is 500? Can you book entire 500? No. That dabba you have to put up. Yes. You can recognize entire 500 impairment loss on goodwill, provided you have recognized full goodwill. If the carrying amount of goodwill, if you had recognized 500, means entire impairment loss relating to goodwill, you would have booked. But have you booked full goodwill? No, you have booked only 400. If you book 400 means how much impairment loss can you recognize? You can recognize only 400. You have accounted 400, so you will deduct 400, so carrying amount will become 0. Okay. Other assets ka portion is 350. This will be the things. Okay, that's all is this question. All. Okay, so yeah, these are some questions relating to Ind AS 36. Thank you.